your business. Dublin City FM, 125,000 listeners can't be wrong.
Good afternoon and welcome to You and Your Business with me, Alec Drew, on 103.2 Dublin City FM. Each week we have an expert from the world of business, sharing their knowledge, insights and tips to help you reduce costs, increase profits and drive efficiencies. If there's a topic that you would like covered, or if you feel that you can make a contribution, please email me at yourbusiness@dublincityfm.ie and perhaps we'll be here chatting one day soon. Today's guest is the founder of Hedge. He bought and sold foreign exchange, stocks, commodities and derivatives in the Dublin, London, Gibraltar, Chicago and Singapore markets. He's keen to help companies of all sizes to access financial products which were previously out of their reach. I'm delighted to welcome to the studio today Barry McCarthy of To You and Your Business. Hi Barry.
Alec, great to be here. Thanks for having me.
Well, I'll tell you, as somebody who was in banking, but I can see you've certainly done a lot more travelling than I ever did. Fascinating. We'll get into exactly what you do, but tell me, what got you into what you're doing today? How did you get into this business?
It started when I was doing a J1 when I was in university, a long time back now, 98. And I went to Chicago, and while I was there, I visited a place called the Chicago Mercantile Exchange, and people may remember that from that movie with Eddie Murphy in it, Trading Places.
I do indeed. Great film.
Yeah, one of my favourites as well. But that floor, that trading floor there with all the guys in the jackets and the crazy hand signals and all that, what they're doing in there is trading futures markets. And while I was there, I watched a little video on the history of this exchange.
Yeah.
And one thing that I was really interested in was the exchange was not created for speculation and for people to gamble on the markets. It was actually created originally in the late 1800s to help farmers who would have all their risk in springtime when they planted their crops. And it would help farmers meet the cereal producers who needed the same crops, but would only get the knowledge of the price in September. So the exchange was created in springtime when all the risk was there to let these two entities to secure a price into the future. And that's what's called hedging. So they each have a certain price now into the future, and they can operate their businesses. You know, it's not a feast or a famine type situation anymore for them. So that's really what got me into thinking about the concept of hedging and how these financial instruments can be used for great good.
Right. Of course, we tend to see that, particularly on television, and that the excitement of people speculating on the stock exchange and speculation on currencies and products. But in essence, really what you're saying is this came together to give assurance to people that they would get a fair price and both sides of this particular trade did well.
Yeah, absolutely. I mean, all business people should really be concerned with is removing risk and removing uncertainty in their business, and that's why they get insurance for a wide variety of things in a business. Now, what perplexes me is the currency part. You know, where a business might win a deal in Canada, they have a load of Canadian dollars. That the value of that currency can fall by the time they get that converted back to euro. And so it always amazed me why there was no products out there that could work a bit like an insurance product to protect against that downside. And that's what we went out and built
a platform for. And in terms of that, I mean, that product has been there for the larger companies, if I'm not mistaken, for quite some time. But it's the other people in the market, the great unwashed, as we might call them, they haven't had access to it.
Yeah, you're right. I mean, these instruments have been around, as I mentioned, since the late 1800s. But typically, you only get the largest companies using them, and typically the banks will roll out the red carpet for these very large businesses, and they'll give them a whole team of people to help them. But when it comes to a mushroom producer, for example, who's exporting into the UK. He might be doing, $1 million, $2 million a year. He's going to find it very tough to get any love from a bank. And so there's no real product available for him to help him from what we've seen.
Yeah, I was just at a Brexit talk the other day, and funny enough, mushroom farming came up in that, and margins are very tight there. So you certainly need assurance, because I think 5 out of the 6 that exist here were nearly taken out completely because of just what happened with sterling only recently. So what you're saying is what you're providing is a product that can help people mitigate against any sort of risks there.
Absolutely, yeah, that's exactly what we do. Yeah, it's very similar to an insurance product, although we're not regulated to call it insurance. It's a financial product, but it has similar characteristics to any type of insurance, where you pay a premium that's relatively small, and then if a bad event happens, in this case, you suffer a big currency loss, then you get reimbursed financially for all of that loss.
Right. Well, that makes sense. So, in essence, that's what hedging is. Of course, if people's eyes glaze over and you start getting into talking about financial products, but it's very, very important for all types of business and for people in the domestic front as well. If we talk about hedging, what are the different types that are available to people?
It really boils down to 2 main types of hedging. Commonly known as a forward,
Right.
which is the most commonly used type of hedging, and you have an option.
Right.
Now, the best way to explain a forward is you fix a price into the future. So you agree with your bank or an FX broker or some financial entity that you will exchange currency, say in 3 months' time, at today's rate.
Yes.
So there's 2 parties to that contract, and that's a definite thing you have to fulfill. Then, if you sign this contract with the provider, you must deliver the currency, or you must buy the currency at that agreed rate.
Yes.
So the good thing about that is that if you were to suffer an FX law, if I'm using too much jargon, tell me here.
Foreign exchange, FX, foreign exchange, I know.
Yeah, when I say FX, foreign currency transaction.
Sure.
So we just found not everyone, I sometimes slip into jargon. So
Don't worry, we'll bring it back.
give me a kick. Yeah. I was just saying that. So the good thing about securing a future rate is that if you suffer a loss in that 3 months, you're going to be operating on a better rate. Then you're going to change currency in 3 months' time at that better rate. But if it goes the other way, it's not good for you, because you've missed out on a gain.
Yeah.
So that currency could, if you'd done nothing, and that the say the sterling or the Canadian dollar had gone up loads, 10-20%, you've missed out on that gain. So there's benefits and there's costs to doing it. The other downside with the currency forward contract is that you sometimes have to put down payments, security deposits with the provider. So this can be very hard for a small business if you have to constantly be pushing money into another institution. It can really mess with your cash flows. The final point on the traditional currency forward is many banks don't even give access to a business, because they view it as a line of credit. So
Right.
it's hard to get a forward oftentimes as it is a loan, and it can be treated the same. So many smaller companies are excluded from these products completely.
Okay, so if we look at a forward, which would be the more traditional way of doing it. So, for example, I have a bill of, let's call it 250,000 sterling to pay at the end of May. I could lock that deal in today as a forward, with the agreement that that currency will be either bought or sold at that particular time, and it's settled. However, what you're saying there is, my issue is, if I don't fulfill that contract, there's probably penalties. I'll be lucky to get it because of its size, maybe with one of the major banks, because I'll have to go through a process of, as you said, like a line of credit, and it's not that easy to get credit these days. So this is probably what's putting off most people in terms of small business and medium-sized business transacting like this. But you have a better option, and we'll call it an option. You have a better option.
Yeah, look, our whole approach in SureHedge is to simplify this, because in its essence, it's not that complicated. It sounds complicated, and it's often sold to sound complicated. But really, these instruments are pretty basic financial products. And we took the view that, like, why overcomplicate it? It's a pretty straightforward thing. We built an online platform where our customers can sign up in a few minutes instead of months. Anyone can sign up, regardless of their size. So companies of all sizes use our platform. and we're really proud that we can help the smaller business, because that's what people should be doing. That's what we feel we've an obligation and a duty to give access to smaller businesses to these products. And so we move towards making it simple, easy, quick. Customer can be on board in a few minutes. They can put in the currency that they have at risk. So say they are owed £20,000, okay, and they're not going to get that for 3 months. They just put this information into our platform, a couple of seconds, and a quote comes out, and that quote is a protection cost, and that could be only 1%, maybe 2% of the total amount.
Sure.
So you're talking £20 to £40 on that £20,000 transaction. And what they get in return for that then is they get the option, meaning they don't have to follow through on this, but if they want to transact at that good rate that they've picked, they can do it. So they will only use that if the currency moves against them and they're due to get less euros in 3 months' time when they change that pound sterling.
It seems to be a fantastic product in the sense that, okay, I'm guaranteed at the very worst I'm going to get this rate. At the best, something better may happen, so I don't have to take it up. But at least I know what my penalty is, and I've paid it up front, and that's the end of it.
Yeah.
And as you said, you can transact this online. I suppose just if you're joining us now, which is very important, if you're just joining and listening to me, Alec Drew on 103.2 Dublin City FM, where my studio guest today is Barry McCarthy, founder of Hedge, and he's sharing his knowledge on a very, very important part of business, and that is transacting, particularly if you're dealing in currencies, and how you can protect yourself in relation to those fluctuations. Brexit happening all around us, and we've seen 15% variations. So let me get back to you, Barry. We were talking about options, and the beauty of options is the sense that you pay a small premium like an insurance policy, which guarantees that you're locked in.
Yeah, and it's deliberately simple. It looks and it feels and has similar characteristics to an insurance policy that everybody would be used to dealing with. And it has some great properties in the sense that you pay that one single premium, just like an insurance premium, and it's gone out of your head then. You've paid the premium, you don't have to worry about any more payments or implications or anything. So you sort of have yourself protected and covered for the length of time that you choose to cover yourself for. If you no longer want the instrument, if you no longer want the option, it still has value and you can sell it back to us.
Oh, right. Oh, yeah. Cool. That sounds good.
Yeah. So we've tried to be as accommodative as possible to our customers. It's an important area, as you say. We've been all over the country talking to business people that import and export and have a degree of currency risk, and there's a frightening amount of inaction. First of all, we've seen surveys from IBEC and Intertrade Ireland saying that up to 70% of SMEs that have currency exposure are doing nothing. Wow. And we went around asking them why, and it's generally down to confusion, and it's down to lack of access to these products. So they just can't get them. The big banks say that they give access to them, they don't. Yeah. Just if you're a small business, just try and see how long it takes. Yeah, and it's probably over by that happens. Yeah, there's another interesting side of your business, if I'm not mistaken, that many of your clients might be trading in multiple currencies, and we know the conversion rates. If you're in the traditional banks, they'll tend to take you out of euro into something else and into that in something else, and there's commissions all the way. But you have the ability to allow people to have multiple currency platform. Yeah, that's right. We also found in our conversations with businesses around the country, we found that bizarrely, and I can't understand this, but this is what people are doing. They may have income in the UK, and they may have a euro account in Ireland, and they're sending the pounds straight into their euro account. Right, and what happens? That automatically triggers a really bad exchange rate, and it could be 2 or 3%. Right. Yes. And so when we sit down and explain this, people are horrified because they just don't understand that this was happening. They're busy running. It's really hard running a business, and they're off, taking care of their customers, working on strategy, doing accounts, doing a million things. So a lot of people just don't have the time to be digging into this type of thing. But once they understand that, doing something like sending pounds sterling from the UK into a euro account here, it triggers a horrendous currency exchange charged by the bank. So the bank just dips in, takes 2 or 3%. Yes. And it's not even made transparent. It's built into the rate. So they just give you a bad rate. Now it's all in their T&Cs, it's all in their terms and conditions, so they're not doing anything wrong.
No.
But people are not aware that this is happening. Most smaller businesses don't have what's called multi-currency accounts.
Yes.
So if I'm to give, again, I'm not giving advice here, but what we see a lot of people doing is they open up lots of different currency accounts. So then you would in your bank in Ireland, you would set up a pound sterling account. You could pay the pounds from the UK into that pound account, and then you could find a payments company or a third party FX broker who will change that at maybe a quarter of 1% or a half of 1%.
Yeah.
Instead of 3%.
Yeah.
So when you actually look at the money amount of this saving, you know, if I turn around and said just by that little action you can save €7,000 a year, you know, it gets people's attention.
I'd say it does. And people tend to forget it. I mean, banks are very profitable by their very nature, and we don't often see where those profits come. And it's in transactions like this, I'm quite sure, that you will see a sizable chunk of those profits. I mean, the face of banking is changing. We have Revolut and we've TransferWise and a whole range of other products out there where you can have multiple currency platforms. But that's different. I mean, what you're offering is a multiple currency platform for people who might have currency. So it makes sense actually to keep your currency in the currency you need. Or, for example, I've got a US dollar account, I've got a sterling, I've got a euro, but I'm receiving the currencies in the particular ones I want and want to pay bills in those, so I don't have to come always back into euro and then back out again.
Yeah. That's a huge potential cost saving for businesses that are actively operating in multiple currency situations. And we responded. I mean, we're very proud that we listened intently to our customers, and we responded to this problem by building this into our own platform. So we give a bunch of currency accounts. We had to get regulated then by the Financial Conduct Authority in the UK and authorised by the Central Bank of Ireland as well, so we can hold client funds, which is really great step forward for the company. So now we can offer a full service where the hedging and risk management can be executed, but then it can be settled into these virtual currency accounts that have no cost at all. We don't charge anybody to hold money in these accounts.
You also have the backing of a couple of major banks as well, isn't that right? Because you would need that just to...
Yeah, you see, ultimately we are dependent on banks to an extent, and you often hear people who have financial technology companies going on about challenging the banks and disrupting the banks, and we were actually once
one of those,
them,
really.
in the early days. But we realised, you know, the banks have an amazing infrastructure, and it's, you know, they're the roads and the bridges. The international banks are the roads and the bridges, and you know, we have to work with them to be able to drive around and get to where we want to go. So we don't see ourselves as being this big disruptive challenge. We want to work with all the players in the system with the end goal of offering really brilliant products to the end consumer who needs innovative products and needs them online and needs them at a low cost.
Sure.
So we do partner with some major global banks, including ABN AMRO, right. Coutts and Co in the UK.
Has the Queen still got her bank account there?
She does, yeah. We're
good for her.
We're in good company, yeah.
Yeah, good. Probably still writing out checks. Good for her. But as you've said, what you're doing is you're sort of complementary services to the existing banks. The challenge for them is they're just not agile enough. I mean, we see it today. For example, how quickly can you transfer funds anywhere from your operation on behalf of a client?
It can be done in hours, you know, if not less. I mean, we're always trying to get it faster and faster and faster. So it's all about speed. It's about low cost. I don't see why a transfer should take days in this day and age. I think we want to get it down to minutes, you know, and we're actually building into our technology a function that's similar to whenever you send a FedEx or FedEx parcel or whatever.
Oh yes, FedEx parcel. Yeah.
Yeah, you know the way you have a tracking code and you can see it's just where your parcel actually is physically. We're building something like that so that you know where your money is in the system, and it can tell you, right, it's 52 minutes away from being credited to your bank account. So this is the sort of direction we're moving the technology in. Yeah. And it is possible in the near future that it'll be instantaneous across the board, as in less than a minute for any international transfer.
Well, that gives great confidence to those using the particular service. I suppose the other one too, which we've addressed, is about security. I mean, people are always conscious of the fact, different banks, where's my money? Who's looking after you? You've mentioned obviously the authorities that you're linked in with, the FCA, and also ABN and Coutts. You have client accounts as well, though. You operate under that type of system.
Yeah, we get this question a lot because we're the new kid on the block, and people don't know us, and they're used to the big banks being around for a long time. And as much as people complain about the big banks, they seem to find some security in the fact that they've been there a long time. When they look at us, they see us. We're around 3 years. We've had substantial investment from Enterprise Ireland and a number of high-profile private investors as well. We got regulated at a very high level through the Financial Conduct Authority. The type of regulation we have is called MiFID, investment regulation, and it's not easy to get. So there's a huge amount of checking and due diligence there. We've also been entrusted to hold client funds, which is the most important trust that a regulator could place in us, and we passed that and been authorised. What that means is all of the client funds do not touch our balances at all. They're segregated and ring-fenced in special accounts. So there's a high level of security. The trading activities we do is separate to the company as well. So in the event that something bad happened, our company, no hedge or position that we have in place would fail or
would be exposed.
Would be exposed, yes. Yeah, so the client would always receive what they were supposed to receive because of this ring-fencing structure that we are regulated under.
Tell me, we didn't mention the website where people, if they want more information, can get that.
Yeah, the website is www.assurehedge.com. So it's ASSUREHEDGE.com.
Fantastic. If you're just joining us now, you're listening to me, Alec Drew, on 103.2 Dublin City FM, where my studio guest is Barry McCarthy, founder of Hedge, sharing his knowledge on the very, very important role they play in helping you protect your currency fluctuations. I suppose people are always tending to think of large companies, and we've covered that in the earlier part of this chat. I thought it was quite interesting. We were talking about somebody like as simple as car dealers. You had a nice little case study around that. Let's talk about that for a minute.
Yeah, I mean, this is the part of my job I love. I love finding solutions to problems for our customers. And one situation that I was particularly fascinated about was the car dealers in Ireland are bringing in lots of UK cars to sell in Ireland. And the reason for that being that the pound sterling, because of Brexit, has gotten weak. So it's less and less valuable. So what that means is an Irish car dealer can go to the UK, he can go into an auction house and he can buy a bunch of cars there and sell them, get a really high margin on them in Ireland, but also save the purchaser money as well. Now that's great as long as sterling is weak versus the euro. So in terms of it being up around 90 pence, that was a good area for the car dealer.
Right.
They're really happy up there. It's strengthened a good bit since then, which is bad for them. So yes. As the pound now gets stronger, they've less incentive to go over. So the kind of great opportunity is disappearing. But where our product would fit in here is when we get up towards 90. Here's the problem: the auction houses in the UK were flooded with car dealers, right, from Ireland, and so they actually and our customer told us this, right? He said they were actually paying more than they were saving on the currency.
No,
because you had then like 50 or 100 Irish car dealers all trying to outbid each other, and the prices were just going up, and so they weren't actually saving anything. So what we structured was the option contract again, which once it reached 90, the client would purchase that option, and that option allows them to change euro to pound at that really favourable rate for them. So now with the pound strengthening, this individual can be in the auction house in the UK on his own, or with not much competition, because now everyone else is operating on the rate on the day, which has now gotten stronger, meaning that there's less advantage going to the UK. But the car dealer who bought the hedge and bought the option has the option to draw down a certain amount at that really favourable rate. So not only is he operating on different economics, better economics, he doesn't have competition against him in the auction house.
So it's a win-win-win for him all over. And it just shows you how creative thinking around using the technology and using the banking system as you've created it on the platform that you've got can make a substantial difference to people in business. But it also translates to the everyday person, for example, those either emigrating or actually returning home, maybe selling a property abroad or something like that.
Definitely, yeah. We've seen that there's a lot of returning Irish people from the US and Australia and the UK, and what you typically see is they might have gone over in the last recession and done very well since then. Now they probably have a young family, they want to return home to Ireland, so they sell a house typically. Say in the UK, for example, they sell a property there. They intend to buy a property in Ireland, right? Obviously, to move their family into. Now, the issue here is that there's a risk in currency once they make the decision to sell the UK property, because when they go sale agreed at a certain day in the UK, there's a certain currency exchange rate, right?
Yeah.
But then you have you might have 3, 4, 5 months before you fully close that sale in the UK and manage to buy your Irish property. So if the value of the pound crashes in that 3 or 4 months, you're probably getting a 3-bed in Ireland when you were hoping for a 4-bed.
Right. So yeah,
and it's a real issue if it goes against you. If it can move favourably for you too, and then you're getting a much better potential house simply because of a 5, 10, 15% movement, which happens very regularly. So that's a great use case for the option as well, where that individual can pay a relatively small premium and can secure the currency rate for the length of time it takes them to close that property sale.
It does show you that traditionally you would have been selling forward. If you didn't complete the contract on that day, you could have been penalised. And what we're talking here with Barry about is the option, and literally the option of being able to make a decision on that currency when and where it happens. We could talk about this all afternoon, but our time has run out on us now. Barry, would you like to give us that website again, please, where people can get more information?
Yeah, the website is www.assurehedge.com. So it's ASSUREHEDGE.com.
Fantastic. Listen, thanks a lot for that, Barry. Okay, that's all we've time for today. A special thanks to my guest, Barry McCarthy of Assure Hedge, for coming into the You and Your Business studio. Thanks also to George on sound. Don't forget that you can contact the show by emailing your business at dublincityfm.ie with your comments and suggestions. The podcast of today's show will be available on dublincityfm.ie from tomorrow. Thank you for your company. And please remember to join me, Alec Drew, again next week at the same time, 12:30, right here on 103.2 Dublin City FM for another edition of You and Your Business.